Hello, chart watchers and Decision Point faithful. Welcome to this Monday, September 28th, 2020 edition of the Decision Point Show. I am your host, Erin Swenlin from DecisionPoint.com. My father was unable to join me today. Everything is fine with him, but he did take a break today, so it's just me, Erin. And so let's go on in. We'll just dig right into what we've got going. We've got a lot to show you. I want to prepare you for the week ahead. And I think there's a lot of interesting information out there that you definitely don't want to miss out on. So of course, I'm going to start off with a market review, and I'm going to talk about bullish falling wedges. I think most of you are looking at that S&P chart and some of the other major indexes, and you're probably seeing these falling wedges on the pattern. And today we did get the execution, at least on the SPY for certain, of that bullish falling wedge. So I want to show you those, talk a little bit about them, and look at a bunch of the S&P 10 is what my dad likes to call it. He sent me his chart list, so I will have all of those charts with his annotations to talk to you about. And again, mostly bullish falling wedges. We're going to go ahead and check back into gold and gold miners. They're not getting that much of the news right now, but I wanted to take a look at those charts. I know that our Decision Point faithful follow gold and gold miners quite a bit. I wanted to look at the sectors, highlight a few of them on our golden and silver cross indexes that we have for all of those sectors. So I want to look at some of those charts and show you where I'm starting to see some movement that looks positive. A lot of the price charts, you can see positive movement on some of these sector price charts, but what you don't see is what's going on underneath the surface. And that's what these golden and silver cross indexes do for you, as well as some of the other indicators I have on those sector charts. So I'll be going over those for you. I thought that I would go over a little bit about timing your entries and exits. I know this sounds a little bit off the mark as far as what we normally cover in the Decision Point show, but I've been knee deep right now in trading rooms. We have the free Decision Point trading room, and I've been doing a diamond mine trading room only for my diamonds report subscribers on Fridays. So I've been doing a lot of short-term trading, and through that process, I've learned how to time my entries and exits a little bit better than I did when I first started, years ago. So I wanted to impart some of that knowledge and give you some trading tips, if you will, from the Decision Point angle, because we don't talk about trading that much. So that conversation is starting to open up quite a bit in Decision Point and on DecisionPoint.com now that we have the diamonds in the rough diamonds newsletters. So where we do highlight 5 diamonds in the rough 3 times a week. So we'll talk about those timing of entries and exits. And then of course, I did mention diamonds. I do have a diamond of the week going into this week. And I'm looking at another one, and I will give credit to where credit is due. One of my subscribers this morning in the free, actually it was last Friday in the diamond mine, did give me a symbol to look at, and I really liked it. And so I'm going to talk to you about that particular symbol as well. All right, the free trading room, like I said, I just finished it this morning on the West Coast, 9 a.m. Pacific, noon Eastern. It is free. Get on our free email list, and then you'll get the notification for how to register. And once you register, it is a recurring meeting, so you should always get notified every week about an hour before it starts that it is starting. And additionally, I'll send out anybody who's on that registration list a copy of the recording. So I'll be sending out a recording today from what I did in the Decision Point trading room earlier. All right, let's get on with it and start off with our Decision Point scoreboards. At this point, there's no changes. We didn't see any changes this week. Currently, the short term is still looking rocky, not a surprise. Right now, our intermediate and long-term signals are on buys, with the exception of the Dow, which is still holding on to a monthly PMO sell signal since December 31st of 2018. So that signal is pretty old, but we've yet to see that change around. So we are heading into the end of the month on Wednesday, 2 days from now. So I could look I'll try and make sure to remember to show you the Dow monthly chart just so you can get a feel for what that looks like and why we are showing this signal there. As far as the sectors go, oh my goodness, I did not update this at all. I'm going to actually pull up the right one for you when I get back to my other parts, and we'll talk about that. So let me go ahead and I'm going to switch us over to my Safari account, but I do want to show you the sector list as it stands right now. Let me go find it here, and then I can bring it up for you on the main screen. And there you go. So currently, this one doesn't even look right. I am just so apologetic right now. We have a lot of neutral signals. I'm going to be looking at these scoreboard, or not the scoreboards. I'm going to be looking at each of these sectors, and I'll go into more depth. But I know right now we do have a lot of neutral signals out there. In fact, I will go to our member page here, and you can see that this is currently what we're looking at as far as the scoreboard goes. So I will show you, this is for our members only, but I'm just going to show you the top part. That's where we were, and this is where we are currently. So you can see a lot of breakdown in the sectors going on right now, which is another reason I want to highlight some of those sectors so that you can see what is going on. And again, this is just price, right? This is just telling me where the 20 and 50-day EMAs are. So if it's on a buy, the 20 is above its 50. In the long term, 50 is above its 200 to get a buy signal. So this would be a golden cross would be a buy, and a silver cross would be a buy. The neutral signal means that the 20 is below the 50-day EMA, and that is occurring above the 200-day EMA. Now these negative crossovers for XLE and XLF, the 20 crossed below the 50 while it was below the 200-day EMA. So just as something to think about, and I'm going to take us over to one of these sector charts right now. So one of the things to think about is, you know, we get that price, that scoreboard tells us where these EMAs are, but what it doesn't tell us is what's going on with all the indicators and what goes on under the surface. And that's where I think you really need to take a peek. And one way to look under the hood is to use our sector chart list. These are for our members. If you are on our website, on the blogs and links pages, these are the links to the annotated sector lists and the alert chart list and the golden cross, silver cross index chart list. These are all maintained by Carl and annotated and checked every single day. So if you want to see his thoughts on any of these charts, that's part of what you get as a member of the DecisionPoint.com website. All right, so I was going to show you the list that Carl sent me. So I'm going to move over to that. Let's see the best way to get to that. Probably be this way. So this is his FAANG Plus list. Okay, so this is Carl's list. He sent it to me since he couldn't be here. And so I'm going to just look at these charts and give you my perspective as to what he was annotating. So this is marking that split that we had for Apple. It occurred back here. And as we've told a lot of our members and those of you who do watch the show, is that typically after a split, even of a big stock name like an Apple or a Tesla, for example, once you get that split and it dilutes it, this amount of shares somewhat, you tend to see a decline. So maybe at first you get that pop of all these people who say, hey, I can afford those shares now. But after that, you usually are going to see a depression of the price and it's going to move lower, which is what's happened here on Apple. Now, of course, we are starting to see a nice bounce coming in off of this support level at that July top. Didn't even have to go down to test it all the way, formed one of these falling wedges, and it broke out from there. And I look in the thumbnail, and I can even see a double bottom here on Apple. So not a bad looking chart, but we're going to be running into this as far as the market goes. The overview is to see these island formations that are coming in. All right. I missed the SPY chart, so I'm going to show you that. Bouncing around a little bit today. What you can see are, again, these falling wedges. This is the SPY. which is what we follow. And we had just gotten a little bit of a breakout, you can see, on Friday from that falling wedge. I texted my dad, I said, hey, I don't know if you've been looking at this as a falling wedge, but I'm seeing this, and it doesn't mean that I'm completely bullish as to what's going to continue to happen in the market, whether we're going to get follow on. But my main point was that this is a bullish formation. We're seeing some good activity here as far as the PMO is decelerated. It looks like it's turning up right now, just above the zero line. It just got out in the nick of time, turning up here in positive territory. We can see that volume, this is the SPY volume, has been declining though on these 3 rally days, and you can see total volume for the SPY very, very low, considering we're getting a nice bounce and getting a lot of news out there that says, hey, this is it. Technology is bouncing. It's time for all these people who were on the sidelines to get in. I disagree. I think in the short term, this is not a bad thing to see. And, you know, at this point, I have to say there is some bullishness going on. We're finally seeing a VIX at lower readings. I invert the VIX so that oversold is on the bottom and overbought's at the top. And as we start seeing some complacency, some less than, not the fear we have been seeing, and now it's above that EMA with the VIX. That's what I want to see. That tells me that we're leaving this period of very high volatility. And when you have high volatility, that means you're generally going in the wrong direction. So seeing us move now above with the VIX, above that EMA, I think it's a very positive thing to note. And as well, the breakout from this falling wedge. Now, I have to put an asterisk on this, and that is the fact that this could turn out to be an island formation. We saw that back here at the top, a nice island, and it broke completely down. That would be my concern right now, would be the fact that we had this big gap up and now we have this island. Good news is, in my opinion, is that we are sitting, the closing price managed to stay above the 20-day EMA. So I think that's also a positive tick mark on the bulls side. All right, so back to these FAANG 10s, the FAANG Plus, the S&P 10. So we talked about Apple. Let's go ahead and move along to our next one, which is Adobe. Somebody had me look at Adobe this morning in the free trading room. I like Adobe. It seems okay to me. I'm not a fan of the technology space right now. I don't trust this bounce yet. I'm not seeing enough under the surface for me to feel comfortable about it. But we will look at that sector chart for technology, and it is looking pretty good. It's hard to deny. But you can see Adobe falling wedge, bullish falling wedge, and we got the breakout. Not an island. So honestly, I like that better because I don't feel as vulnerable to that reversal that you can get with the island. So we have the PMO, it's turning up on Adobe, that nice falling wedge and the breakout, that looks great. Amazon, what's going on with Amazon? Quite the pullback. I saw this level on Amazon. This was, to me, the place where it needed to make that turn. It needed to hold this support level. At worst, this support level at 2,800, but it did manage to bounce before having to test 2,800. So I think that's positive. There's another falling wedge. And this one executed last week, and now we're starting to see some follow-on movement from that breakout from the wedge. So I think that's positive. You can see trading was mostly above the 20-day EMA. So I like to see that too. So Amazon is looking pretty good right now. Nice 2.5% gain as well. Facebook. Facebook is looks like it's taking a little longer to break out. You know, we did get a breakout from this very deep, steep falling wedge, that bullish pattern, had a fake out breakout right there earlier at the end of last week, midweek, Wednesday. But we saw the follow through on Friday. We got a nice bounce after it had come back down to this level of support, and now it's bouncing. It's still below its 50-day EMA, which is not something I like to see. And we closed beneath this area of resistance because this is a double bottom. So I'll be watching this confirmation line. We got the breakout above it, but then we couldn't close above either the 50-day or that confirmation line for a double bottom. Hopefully I'm not talking too fast, moving too fast. This is what I do in my trading room. I just boom, boom, keep going. All right, so at this point, I'm liking the Facebook chart just because it did hold this support. We did get the breakout, but I really would like to see more from Facebook before I'd be ready to get inside of Facebook and own that. All right, Alphabet, another falling wedge, another execution to the upside as expected. It's held the 200-day EMA. That's pretty important. That seems to be the correction spot for Alphabet, right? We came down to 200 back here. We came back to the 200 here. It looked like we could have gotten that bounce, but of course this is then the virus, right? That really took away a lot. But you can see we've come down. If we're gonna break beneath the 50, it does tend to come down, and its personality is to find that 200-day EMA and then make the move to the upside. So I think that's what we're seeing at this point. You know, there's still overhead resistance here, right at these lows, these tops. You can see that right through there. And it's just now getting ready to hit that. Most importantly, we'll be watching that 20 and 50-day EMA. But I like the breakout for Google. I think that's positive. But again, technology, that's of course comm services, but it's just, I'm not ready to start building my portfolio right now. It's just, I don't see what I want to see in order to start building my portfolio. At this point, I'm about 35% in, and I'm still trying to divest a little bit more. So I'm not quite ready to jump in. I think we have some downside to endure. Right now, I think we're getting a nice little bounce. So for me, it's that time for me to book some profits on these upside moves and then sit back and wait for the real bottom to come in, because I don't think that this is it. Excuse me, in the short term, possibly. All right, MasterCard. So this was another falling wedge with the breakout to the upside. In this case, it is an island, but we did get above that 20-day EMA, traded completely above that. I think that's a good sign here for MasterCard, and you have a PMO that is turning up. So those are good signs to see. Nice 2% plus move today for MasterCard. Microsoft, full disclosure, I do own Microsoft, hit this very important area of support, and we did get the bounce we wanted to see. It was struggling here at that 20 and 50-day EMA after it broke down, but today it's our first time trading completely above the 20 and the 50. The 20-day EMA avoided a negative crossover, so that intermediate term trend model buy signal is still there and intact. Netflix. Here we go, big falling wedge and a nice breakout. Full disclosure, I do own Netflix. You can see a nice PMO is turning up right now. It did get below the zero line, but it's already trying to make its way back up. Again, a bounce off of some significant support, so I would expect a rally to continue. So at this point, I think Netflix is looking pretty good. I know that I'm holding on to it. It's a longer term investment anyway, but you know, I don't like to take long rides to the downside if I can avoid it. But at this point, I'm pretty happy. It's making that bounce. I'm looking for it to come up and test this declining tops trend line. NVIDIA, there we go. In this case, it was a symmetrical triangle, not a falling wedge, but you can see the PMO is now turned up. Nice with price closing near its high or on its high. Like seeing that. You know, other than that, I mean, it's a great looking chart, so I can't complain. NVIDIA is looking pretty good. All right, Visa, we looked at MasterCard. Here's another falling wedge, big pop, possible reverse island could be setting up. In this case, 20 and 50 did not hold as support as far as the closing price goes. But we did get that nice pop coming out of that bullish formation. But here you can see very important support, or I'm sorry, resistance could be a problem. Would really want to see that pop above there before I would be considering an entry. All right, so let's see, we went through those. I'm going to show you a few of the sector charts, and then we'll start looking at these timing of entries and exits. I'll just be looking at a few of the charts that are hitting my radar right now. All right, so here we go. This is the comm services. You can see that we are starting to get a little improvement on these percent of stocks above their 20 and 50. But overall, the silver cross, we're still on a negative crossover here. And as far as the golden cross, you know, 65% of the XLC components have their 50-day EMA above their 200-day EMA. So 65% of the XLC members have a bullish bias. So that's a good foundation to start with, right? That's what we want to see. I would rather it be a higher number than that, a higher percentage, but it is moving to the upside again. And so I like the golden cross. It's telling me there is some foundation there. But at this point, we're not seeing, we still are seeing a confirmation to the downside as far as percent above their 20s and 50s. So that's comm services. I wanted to point out XLK as a highlight today. Carl and I have been looking at a possible head and shoulders here on XLK, but I have to say today's breakout to the upside gives me some confidence, I guess, that it's probably not a head and shoulders. Not to say that we won't get the breakdown here, but you know, seeing that nice move to the upside, we're getting trading and closes above the 20-day EMA for XLK. But what's going on under the surface? We're starting to see some improvement on these indicators, right? Even the silver cross, it's still in a declining trend. It's confirming the current declining trend, but we did see it start to turn up just a little bit. So we're starting to see that there's some participation in the technology area. I'll be watching this closely to see if we can get some continuation on this. 75% of components in XLK have a bullish bias, so that's a good sign. All right, so let's go ahead. It's getting near the end and I want to cover my diamonds and talk to you a little bit about entries and exits. So I will do that as I talk about the two diamonds that I brought. So the first one would be Grubhub. So this is the one that I was looking at on Friday with my diamond mine. I still like this stock, okay? There are a few, I'm not gonna lie, there are a few things that maybe aren't positive. Number one, remember we were just looking at XLK at a possible head and shoulders. Well, certainly that's a head. This could be a left shoulder, but we're still on a rising trend. We haven't really set up what could be a right shoulder at this point. And I like everything else on this chart because it's telling me not to worry about that. It's telling me to look for an upside breakout. You have the RSI is positive. You can see the PMO has just today triggered a buy signal above the zero line, just barely, but it did it. You can see that the volume here on the OBV, we're getting the rising bottoms, and that's a good thing to see right here. So I like that. And if I were to look at possibilities for where to set a stop, this is the tool that I like to use. And I set it up here with basically where price is currently. And then I start moving it down and looking at the percentages. So for me, I like to set a stop between 8 and 10%. So this is how I would normally set up a chart for my diamond subscribers. I would show them, this is a chart I like, and show them all the reasons why I like it. Scooter, again, in the hot zone. You can see rising bottoms on the OBV, a lot of good things here. And then I would show this as a possible stop level under very important support level. If you lose this support, you don't want to own it. You don't want to write it down, there, you know. So that would be how I would set up one of these charts for diamond subscribers. So now that we've done that, let's just say you're interested in getting in, right? So we need to figure out how to time an entry and an exit. So here we have the Grubhub chart here, the 5-minute bar chart, candlestick chart. And what I do is I look and follow my PMO and I follow the RSI. And that really will help you a lot of times figuring out when is a good exit. So for example, if you're riding this nice move and then you open the day with a big gap up, you might have thought, oh, maybe I need to sell it because it's on the big gap up. Well, at that point, I would still be watching your RSI is still positive, and the PMO only back here did it start to really even decelerate. But I don't think I would have been worrying about selling until I saw this move here on the PMO and saw the RSI starting to really lose some steam. Of course, that would have put us with an exit probably around here. So it wouldn't have been a perfect exit, but it certainly would be a better exit than exiting down here. Now let's flip it for an entry, right? 5-minute bar chart again. So now I'm looking for entries. How would I time this? Okay, so again, follow the PMO, follow the RSI. So let's start here with the RSI. It's negative, 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 finally goes positive here. I'm gonna use this just so we can see. So that's where it goes positive. Well, what's going on with the PMO? All right, well, the PMO has started to move to the upside. It is decelerated. And right when the RSI goes positive is just about when we get that PMO buy signal. So that's telling me this is my entry right in here, okay? So you would have entered maybe not at your very best, which is the very lowest, but you didn't get yourself caught either. And you still ended up on an entry that is very close to the close, but still probably better than what you saw. Now, if you didn't get in, right, and you're looking for going in tomorrow, if you were interested, you'll do the same thing. You're going to want to watch. Right now, that PMO is very flat, but that's okay. All right, I'm going to show you my other one that my one of the subscribers pointed out to me, and that is biotelemetry. And here it is over here, beat. All righty. All right, so let's keep looking at this. So beat. All right. I do have a couple minutes, so we're going to look at a few more entries and exits. Perfect. All right, so this was one that was brought to my attention by a subscriber on Friday, and you can see it was having this really nice move here to the upside, and today it continued. Now, I have to say I was a little concerned when I was watching trading here and the fact that we ended up with kind of a long tail here where we burst up out of the gate and then we just spent most of the day pulling back and didn't do that much until the end of the day, where we ended pretty much on the low for the day. So that could be a concern, right? Because let's see what's happening right now. The RSI is negative. The PMO is pointed downward, and look at what happened to volume. We got a lot of selling volume. You know what? That's okay, because I like this. I like where the RSI is. And so that's okay. I would want to watch it tomorrow, the next day. Look, you have a 20-50 day EMA positive crossover. That's a buy signal for the intermediate term trend model. So there's still a lot of good stuff going on. So what do we watch for? Tomorrow we want to watch, see if this move to the downside continues, and watch that PMO. And then when it gets in that oversold territory like it did here, and we start to see that turn, and we start to see that RSI turn and start to make its move, that would be the entry point you're looking for. So my hope would be is that we're going to see a continuation of this decline going into tomorrow. The PMO is moving lower, and that would be where I'd want to watch, is sitting there at my computer and watching where it opens and seeing what the PMO is going to do at that point. So that's what I would talk about as far as those entries and exits. All right, well, that pretty much concludes it for us here on the Decision Point show. Lots of talking on my part. If you enjoy what we do here for Decision Point, I really would recommend you come and check out our website. We have not only our paid articles in here, but you will see free articles peppered in here, as well as free links that I think you'll find very valuable. And so I will close it with that and wish you happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.